Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, July 12th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index down minus 0.1% of the week last week to now down minus 4.7% year over year after it broke down in trend last June from bullish to bearish on a 90-day trend duration. This is after coming off of trend resistance at around 92.50 or so just last week. You take a look at the euro versus the US dollar, up 0.1% on the week, and is still signaling bullish on a 90-day trend duration. Taking a look at the Japanese yen versus the US dollar, that appreciates 0.8% as it continues to still signal bearish on a 90-day trend duration. Take a look at the British pound versus the US dollar, that appreciates 0.6% last week as it's teetering on a potential trend reversal between bullish to bearish trend. But again, that needs to be determined over the course and duration of several sessions. And then you take a look at the Canadian dollar, that was down minus 1.0% versus the US dollar last week as it continues to signal bullish on a 90-day trend duration. So moving along to commodities, we do have some interesting divergences and signals in this asset class broadly. Take a look at the CRB index that did correct minus 1.5% last week, but still remains up 13.4% in the last 3 months as it continues to signal bullish on a 90-day trend duration. Taking a look at breaking that down further in WTI oil, that corrected minus 0.8% last week to now plus 26.3% in the last 3 months as it continues to signal bullish on a 90-day trend duration. What you want to look at in oil space is oil volatility, which is teetering on trend around 43, 44. Which it did get above last week, but is now down into the upper 30s this morning. Otherwise, taking a look at copper, that continued its reflation higher, up 1.6% last week, continues to signal bullish on the 90-day trend duration. And this is where the divergences arise, are in the agricultural sector. If you take a look at corn, that came off 10.8% last week. Moving now to bearish on 90-day trend duration, and wheat in kind as well came off minus 5.8%, moving to bearish on a 90-day trend duration as well. Touching on the global equities, you take a look at European equities. So in not exactly closing at all-time highs like you had in the SPY and the NASDAQ on Friday, following yet another we have an episodic non-trending spike in equity volatility with immediate term downside in the range for vol space in the VIX down to 14. You had NASDAQ's volatility, Russell volatility coming off trend resistance and marking all-time highs for both the SPY and the NASDAQ on Friday. But unlike that, it did have the European equities. You take a look at German stocks, those continue their appreciation higher. Spanish stocks were down minus 1.5%, but are still up 4.9% last month. And then you had Swiss stocks as well, up 1.6%. Touching on Asian equities, you did have Hong Kong continue to move lower, down minus 4.9% last month. However, with Taiwan up 0.9% the overnight to plus 3.5% last month, and then Nikkei up another 2.3% in the overnight as well. Just following up on the potential trend reversals, you have the 10-year yield coming off of trend support right around 129 to 131, but quickly recaptured that, closing the week at 1.36%. Take a look at the MOVE index, which is the volatility component of interest rates. That is around 59 currently, which is bearish for rates. take a look at, which is on the back of, again, coming off of all-time highs in the equities. You did have high yield, now plus 269 over. That's on the back of a slew of economic data set to be reported this week. If you take a look at CPI and PPI on Tuesday and Wednesday, and then you have industrial production on Thursday and retail sales on Friday. So continue to remain data dependent. If you have any questions or like to follow up, that's all we have for you today. Please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.